everybody. Welcome to the Perfect Recipe for Retirement series. And this is the session which we do every month to make sure that all of us learn investing and become better. Am I audible? If you are not audible, please type on the chat. Chat is visible. The whole idea of this session is that people don't commit the wrong thing. A lot of these people of us basically commit a lot of mistake while investing. The whole idea is that we do not people do not commit the mistakes which our seniors have done, or let's say, for example, there are a lot of us who basically do not know investing and they would like to understand how does it work. So let me speak in Hindi also to make sure that you understand. We all are invested in our life. हम सब के सब investors हैं और हमको सही decision लेना है. हमें we have to take a good decision. And when we take a bad decision, the cost is very, very high. And that is why I started this channel long ago. And you can watch more videos by subscribing to Client First Capital channel on our YouTube. And we have spoken to various subjects. And this is an educational session. Whatever today I'm going to mention is not a stock recommendation. So please understand, don't buy any stocks just because I have mentioned there that the mention that is stocks in this particular session. So the whole idea is basically to help you to become a better investor. Some of you want to try out investing on your own. That's one. Some of you want to figure out how to choose a better investment manager. All that help you can get from these sessions. I think we are doing it for now 1.5 years. And we don't want to do a session every day. We want to do a session every month. And this session is dedicated to Mr. Phillip Fisher, who wrote this book. I hope this is visible to you now. This man is no more. He died in 2000. He was 91 years old. Up to 1999, he was, and 2004, he died. Up to 1999, when he was 91 years old, he was handling the Fisher and Company. The most surprising thing is he was a growth investor at the time when people were just maybe buying and selling shares. Maybe they're doing brokerage or doing all sort of. Harshad Mehta was not even born those days. So what I'm trying to tell you is that those days a growth investor exists. Warren Buffett admire him a lot, and he always says, I'm an eager reader of whatever Phil has to say, and I recommend him to you. Now, I had the book. I had a pleasure to read the book roughly 6-7 years ago. I reread the book. And I thought that this is very relevant for all of us today, specifically when the markets are down and we have no idea of what to be done. So here we brought the session to you. What we're going to cover in this is we're going to cover the 15 points which Phillip Fisher wrote in his book, Common Stock, Uncommon Profits. His approach is very much of similar to what Peter Lynch did. Peter Lynch would have somehow applied Phillip Fisher. We also apply Phillip Fisher, let's say subconsciously, but if we go to Phillip Fisher methodology, it is much in detail. The good news is you don't really have to master the whole 15 points of Phillip Fisher methodology for your investing. That is one very important thing I would like to tell you. Don't worry, you don't, because it is a very detailed approach. And the bad news is this is a very detailed approach. So if you would like to learn this investing, you have to really take your pen and you have to take your notebook, and you have to really be sincere and serious about the stocks where you invest or the companies you would like to invest. So let's say this can be also applied if you want to open a new franchisee or you want to get into new business. That is also possible that you can apply this method. So my team has created a presentation. I'm very thankful to them. They always help me with these great presentations. So let's start it. Before we talk about Phillip Fisher, just for people who have come first time, we are Client First Capital. We are a Mauritius regulated company, financial advisors. We mainly charge on performance fee. We have been an insurance broker. We have been a third-party investment advisor. We had roughly 200+ crore book, which is being managed by third-party fund managers. I request all of you to mute. Give me 1 second. And then eventually we became a fund manager, and we have adopted Warren Buffett style of investing. The reason is very simple, that unless and until we share your pain, we should not have any right to share your gain. Today, when our investors are down, let's say 10 to 15 or 16%, depending on the portfolio.
एक कोई इसने बोला था Scuttlebutt investor करके कोई presentation
Thank you. So please mute yourself. I request all of you. So it does not bring the disturbance to other people. So 2015, this firm is started in Dubai, and then we opened a company in Mauritius and India. Indian company manages the Indian assets. We manage the global asset. I have something called Founders Portfolio, where we largely have only one fees, and we work mainly on performance fee. Even the fixed fees adjust in the performance. The whole idea is very simple, that we would like to live the journey of the investor. I myself is an investor. When I sell for me, I sell for you. When I buy for me, I buy for you. We really don't make much out of a brokerage, because that's what we don't buy and sell. If you have a portfolio with us, you will eventually find that there is hardly any transaction in a month or in a quarter. We only change a company when we think that the company has not having enough potential. We always believe in selling a company when we think that we have found something better. But in the words of Phillip Fisher, the time to sell a good stock is never. So he bought Motorola in 1950s and he never sold it. And that's what essentially we are trying to do here, that we would like to leave a compounding machine making a lot of money for you. Think about this way. For example, some of you have joined us today. So let's say you are a distributor of let's say a garment brand, or let's say you are a distributor of a computer brand, or let's say you're a manufacturer. Did you leave your company? This is the same company, you get your dividends. Have you ever left your company in between thinking now enough is enough, I am not able to make enough money? But what eventually I am sure you would have done, when the bad time came, you put in the more effort, you put in the more capital, and you would have changed the way you do the business. I see you guys moving from the deras to, let's say, the corporate offices. We ourselves have become corporatized. We ourselves have started online. Similar approach we have to apply when we buy these companies. So we started this discretionary portfolio. We have never been negative. Doesn't mean we will not get negative. Our returns speak for ourselves. Anybody who has completed 2 years with us or 2.5 years with us is right now running at 40-50% net profit. That is the kind of return we have generated. However, it is very sad also that people who are not making money in the last 1 year or 6 months or 7 months are not able to understand the gimmick of stock market. Believe me, stock market is a place where the store runs on sale and customer runs out of the window. But if you get a, let's say, discounted sale for your trip to India, you will surely gonna book a ticket and travel. If you get a discount on iPhone, which I'm sure it is not easy, but if you get a discount on iPhone, we will run for it. So we have to understand that this is the time to accumulate. This is the time to accumulate a lot of good companies or great companies, or the great opportunities are there in the market. So anyways, it's not about our investing philosophy. It's about Mr. Phillip Fisher. This is a book I'll recommend to all of you. Let me tell you, the book is not easy. It requires a second reading. It requires you to underline things. And there in this book, he coined the word scuttlebutt. Oh, what is scuttlebutt? If you look at scuttlebutt, it's nothing but a spy approach. It is basically cut through. The scuttle word is basically a cut across, which means you are trying to figuring out, the whole idea is that you are basically figuring out that how something works. And this is what the approach scuttlebutt is. So scuttlebutt also means rumor, but this is a word coined by him because he was not able to find any other word. Now, Warren Buffett used it. Warren Buffett said that in my life, I'm 85% influenced by Benjamin Graham and 15% I'm influenced by Mr. Phillip Fisher. So that's very important. While buying American Express for his Berkshire Hathaway portfolio, he used Phillip Fisher method. He has got 2 more investment managers. I don't know how many of you know it. They use Phillip Fisher's scuttlebutt method to invest. Indirectly, we also use 7 to 8 points of Phillip Fisher to invest. Peter Lynch also in his life has invested Phillip Fisher in a very, very normal manner. Now let's see what are those 15 points. And this is just about Mr. Phillip Fisher. He did not give too many interviews. He was not known in the public as well. 1958, Mr. Fisher got very famous when he wrote this book called Common Stock, Uncommon Profit. And Mr. Fisher, scuttlebutt approach is very simple about seeking information from supplier, customers, the stakeholder, the distributors who can tell you more about the company. And obviously, he also mentioned that you have to be very cautious because ex-employees generally don't talk very good about the company they have left. This is the approach. I think we have been applying this approach in our investing, but now it is more going to be more informed. It's going to be more what do you call uh, the uh, the retail one, because now we have this portfolio of what should we do to learn more. The only way is that we go further in detail, further in deep, and we become so confident about our companies. So there is something which is very important, that you should keep learning about your companies, because that is how you will buy more of them in the future. Now, for example, we have a company called Oldie's Bargain Outlet, which is 31% up this year. Now it makes me inquisitive that this company, which is right now up 25-30% in this kind of market where the stocks are not doing well. Now, what is very, very special about the company? So then Scuttlebutt approach helps you to learn more about the company. Let's go to the next slide. Now, these 15 points, please forgive me, the points are very big. I'll try to simplify them. So it cannot be, it was not easy to bring them in one slide. The first point, and let me read, does the company have products or services with sufficient market potential to make possible sizable increase in sales for at least several years? Now, that's a very good question. And we can analyze it in a very, very simple manner. For example, an oil company can only sell oil, and oil is dying. Yes, you would have seen a good upside in the last 6 months, but eventually we all are moving to electric vehicle. This is a sure thing. We all are moving from non-renewable to renewable. So it is very clear that an oil mining company is not the company to be in. That's one side. The second, let's say gold mining company. The basic challenge with all these gold mining company is that to find new mining. You would have noticed, if at all you are an investor in the mining company, the mining companies keep on doing these mergers and acquisition. They start buying new mines because the issue is all the golds, all the silver, all the copper, and 95% of that is already mined from the earth. So it is becoming very difficult to mine new resources. So again, the question is, does the company have products or services with sufficient market potential to make a sizable increase in sales for at least several years? Let's talk about you for that matter. I'm sure you would have started your journey as a businessman with 10 or 15 products. And as the time passes, you start selling more brands and you start selling more product. And that is what we have to look at, that whether the company which I am buying in, do they have single product or do they have capability to develop many products? For example, we bought this company Zoom. Again, I'm cautioning you. We are using Zoom right now, but this is not the stock recommendation session. So please do not go and buy individual stock. I strongly reject buying the single stock. You should always look at a portfolio approach. So Zoom, for 99% of us, has the same one product called Zoom Meeting. What we tend to forget that the Zoom also has, or we should also check if Zoom has more product. Now, for Zoom is a product for corporate and not for the individual users. Zoom has been made for the people with a big organization like 1,500 employees, 4,000 employees. How will you come to know about this? Only when you will read their earning reports, their financials, you listen to the CEO. So Zoom was in existence even before the pandemic, and they were very much focused towards the big enterprise. And this pandemic has given them a huge tailwind, and they've got a huge cash flow. But Zoom has Zoom Phone. Zoom now developed Zoom Reception. Zoom has also developed Zoom AI, which analyze your sales transcript or transcript on your this thing. Zoom has event. Zoom has the break rooms. So a lot of possibilities are possible over Zoom. And now Zoom has started acquisition, which is going to deliver the next generation revenue. So that is the mindset of the management is very important here. So let's say you have any company which you have bought in and you would like to discuss here the first point, please put in the chat and I will be happy to take it forward with you. Now, let's come to the second point. Does the management have a determination to continue to develop product or processes that will still further increase total sales potential when the growth potentials of current attractive product lines have largely been exploited. In a simple manner, यदि कोई नया product develop कर रहे हैं कि नहीं, do they have a growth mindset? Very simple. And I can see some of you who are my investors, they have growth mindset. So I remember one of my investor who is with me today. 10 years ago, he was very happy with 1 or 2 or 3 shops. Today, I can see him. The global footprint is very small for him. He's expanded into 5 or 6 countries. And I can surely see that he will be in 20 countries. My all the best wishes to him. So somewhere his mindset would have changed. Similarly, people like us also, when we coordinate and meet these billionaires, our mindset also gets changed. So there are 2 types of company. One company which have a fixed mindset, which gives you dividend. A lot of investors, by the way, this is a very good point, are running behind dividends. Like Coal India, we want dividend. We buy AT&T, we want dividend. We forget one thing, that dividends are paid out of profits only. So if a company is earning good profits and able to grow it further, you'll actually get a good appreciation on the price. So don't focus on dividend, because if the dividends are coming to you, it means the future of this company is very bleak, because company does not find any avenue to invest your money. But somehow the UAE based investors or the investors who are millionaires who have a large chunk in the property would love to see dividends. And then people like these private bankers and even fund managers, they start playing a gimmick and giving you a dividend every year, and by saying that it's a coupon or it's a fixed return. So I request, yes, 10%, 11, 15% of the money should be in the debt-oriented funds or the secure funds, but remaining money should be deployed the way you deploy in your business. So that is what the mindset we talk about here. So when I look at Zoom or look at Amazon, there's a research happening. So Amazon CEO, ex-CEO or chairman, which Mr. Jeff Bezos very clearly said, 20 years ago, we had no idea if we'll develop Amazon Prime. We had no idea if we will develop Amazon AWS. And today, look, they are not only a pioneer in AWS, that business itself is worth $5-6 trillion, because the kind of growth is happening. And AWS is a very simple business. I'll explain a simple word. Today's Zoom meeting is hosted on a cloud server. It will be recorded as well. Now for this, I need a space. For example, if I would have called you all physically, I would have to book a 5-star hotel or an India club, and I have to host the whole meeting over there. Similarly, this meeting is hosted on a server. That server is provided by a cloud company, and the cloud is nothing but the place where you keep all your storage. So some of you are still selling offline, but the moment you come online and start selling your product, you need not only the infrastructure, you also need a lot of services around that. AWS is a leading provider in that, and it's a part of Amazon. It only happened because Amazon has set a culture, and that culture is basically management determination to continue to develop new products. I don't know how many of you know Amazon just entered in pharma. Now, pharma also, if you ask me, is a very, very opaque industry with a very high margin, very stickiness among the doctors, and people consider doctors as a god. So this is also a section where Amazon can make a difference, the way they made a difference in grocery. So that's what about the second point. Third point, how effective are the company's research and development efforts in relation to its size? Now, if you have heard Dr. Vijay Kedia, I keep mentioning him again and again, R&D is must. In 90-95% companies who would like to see the next 20 years, they need to do R&D. Now, when you develop new product, you create the market. For example, we developed this new product called Founders Portfolio. Why it is called R&D? Because when we design this product, we are not going to get the money immediately. It will take some time. So a lot of these companies, which are like QuickBook, if you've heard about this accounting company, you are using an ERP software probably. Let's say we all are using booking.com or makemytrip.com. They're all innovating on a daily basis. Like Tesla is a research company which is forcing all the other car companies to do proactive research. For example, every new iPhone has something new to offer. Netflix is a research company, R&D company. Every now and then they are doing the R&D. Now, what is the question here? The question is, if a company has done R&D for last 10 years, is it increasing their margin? ये उनका profit बढ़ा रहा है या उनका profit कम कर रहा है? Which will tell us कि उनकी R&D से कंपनी में जो पैसा खर्चा कर रहे हैं R&D में, is it really helping them to grow? That is this question is, and we will see. I'll show you in the next slides that how we have analyzed some companies and see the effectiveness in the R&D. Fourth point is, does the company have an above average sales organization? Now, this point is not easy. This point can only be factored in when you talk to a salesperson of that company and you talk to the competitor as well. So this is the fourth point, which I'm saying is not easy, but don't worry. You don't have to become master of all the points. So let's leave the fourth point, because it can only be an interaction when you will have with the salespeople of the company and the competitor. You will come to know that whether the company's sales organization is above average or not. Now, for fifth point, does the company have a worthwhile profit margin? Now, I think this is understood very well by all my investors. Profit, profit, and profit. If a company doesn't have a positive cash flow, the modern term, when we invest in the SaaS company, the most important is the positive cash flow. And in the olden days, it was all about profit. We all at the end of the day work for profit. So profit is one thing. The second is margin. Now, does the company enjoy above average profit margin? I don't know how many of you really understand this, but for example, if I have a great brand, my profit margin will be 30 to 40%. The gross profit margin we're talking about here. That's a very healthy profit margin for a company. And that can give us a lot of cash flow to deploy at the succession stage. So profit margin is very important, because if there is a downturn like pandemic comes in, or let's say a recession comes or depression comes in, and if you have a very small profit margin, then what will happen eventually is you might not survive. So a profit margin of a 20 to 40%, depending on the industry, is a very important measure for a company to be a growth in company as per Phillip Fisher. Sixth point is, what is the company doing to maintain or improve profit margin? Now, this is a point which one can analyze from the financial balance sheet, and we also from the earning calls, also from the tone of the what do you call the investor, the manager or the CEO, when you listen to him, or the investor relationship team. So when I was talking to one of the company 2 days ago, the investor relationship guy was focusing more on the cost, because now inflation is going up, and each and every company is trying to focus on the cost. And that's why either they will increase the sales price, they will not give a discount. For example, Tesla was giving a discount of 15,000 dirham last year on the Tesla Model 3. This year discount is gone. Similarly, I'll tell you a very important thing. I am a customer of Emirates NBD. Emirates NBD has this credit card which allows you the concierge services. So I was booking the concierge services for pickup from my home to airport, and I came to know that from Derby, which is the provider, that Emirates NBD now they don't do any more this concierge services. In my assumption, which I have not checked with the NBD, that millions has been saved by Emirates NBD by not providing the concierge services, where they're charging you for this, where they promise you that they're going to give you the service in the starting point. So we all have seen frequently that we buy something and we know that 10, 15 things we can do with that product or the company or services. And later on, we come to know this is cancelled, this is not there, this is not there. Now that look very odd as a consumer, but that is what the company do to increase or improve their profit margin with a time like this comes where the inflation is high. For example, Burger King has reduced their size of the burger. You would find that a lot of people who are selling you 1000 ml product, now they're selling you 950 ml. And it's a very common thing, because you can't increase the price, reduce the size. That's what people have been doing. For example, if I remove, I'll give a very simple thing. If I, let's say, very simple, if I remove, let's say, or shorten the fuel tank of a car, I'm going to save a lot of money. But the consumer will never come to know, because nobody really compete on the tank capacity. So let's say your tank capacity is 100 liters. And if I make it 80, 85 liters, I actually save 15% on the fuel, on the tank itself, which could be a 3% margin on overall car. But you and I will never complain, because who really sees about the tank capacity? So that's one. Now, Coming to, does the company have, the seventh point, have outstanding labor and personal relationship? Let me cover this with the eighth point as well. Does the company have outstanding executive relationship? A very simple way to understand this, and I'm sure you would have noticed this labor thing and all, and a lot of us do not have this labor union because we're a small company. Labor union makes the whole thing very, very dirty. We have seen this in the movies in Bollywood. That Govinda, if you remember, Govinda was used to star and he became a labor union head, and then he married the Kader Khan's daughter. So this is something which is what we have seen, which is very prevalent in the manufacturing zone of the business. But in America, the labor union are also strong, and you would have noticed that Amazon has frequently rejected the labor union. In the recent interview of Mr. Andy Jassy, this question has been asked, that what is the problem with labor union, and he said, we have absolutely no problem. The only issue is with labor union, the decisions get really, really slow, and that's why we are not in the favor of labor union. So subtly he is putting, the whole idea is that if there is some person between the employee and the management, he is going to create more problems, or let's say more delay in the whole process. You would have noticed that Amazon employees themselves have rejected the labor unions various times. It is a matter of study that one should focus on some companies which have got labor union and some companies who do not have labor union. And in the last 10 years, which ones have done better? So the impact of labor union will be very clear over here. Now, I'm sure you would have also heard sometime that in Maruti factory, there have been labor strike. At least in the last 10 years, 2 or 3 times you would have heard that. So the very good way to figure it out, that go to an earning report of any company, you will find that the company mentions that there is no employee of the company is part of the any labor union. That's the best way to find whether the labor union, if labor union is not there, it means company is close to or is able to manage their labor relationship well. However, this could be partially true and requires further study. Now, similarly, on the executive relationship, now that's very important. The higher management is the key for any company to drive to the next level. The higher management should behave as owners and promoters. And this is something you can figure it out from the employee stock option policies. You can figure it out the way they take the decisions and how long they have stick with the company. This is very, very true in today's scenario, that if the employees, the higher management employees, are not given the ESOPs, they are not gonna stick with the company. Or ESOPs are in terms of nothing but the decision-making capabilities and the stake in the company. Now, no wonder why Amazon did much better than Walmart. No wonder why Netflix is a great company for the last 10, 15 years. The reason is Netflix has such a great transparency that everybody can access any data in Netflix. All the user metrics can be accessible at Netflix by any employee. You would have also heard there is something called open door policy. So if you have glanced the news, Reliance chairman and CEO Mr. Mukesh Ambani, when he ventured into Reliance Jio, it was an open office and he was sitting with all the people. So the days for cabin are like over, depending on which kind of company you are. Obviously, the meetings rooms have a lot of access. And I remember, I know this, one of the jewelry customer of ours who has now shifted to the new office. Even the open office culture is really getting to the next level, because now the employees are also well learned. They also understand their rights, and nobody wants to have this employee going out who has spent 5-10 years with us and is a good employee. So everybody wants to give them an incentive. I just now talking to somebody in the morning, and if you heard about a company called Pathkind Laboratories in India. So Pathkind in the earlier version is also a conglomerate, and it's something called Mankind is the promoter company. This person was the CEO with the Mankind in the other division. And after a stint, he left Mankind, and now he came back as a co-owner with Pathkind in the Pathkind diagnostic business. So that is the kind of relationship one has to be open, that even with my old employee, I would love to partner and take to the next level. Now, does the company have depth to the management? Now, this example we'll understand with Constellation Software. So depth means how much decision making you allow your employee to take. I think this is a very, very important point. We all should agree, if at all we agree. So in the Lala type of company, all the decision making is done by us. So I'm sure the major task of yours when you come back from the holiday is to sign checks. No, don't take it to the personally, but check signing is an activity which can be very much dedicated to the respective managers with the amount dedicated in front of it. So what Constellation did, they are very famous for acquiring more companies. I'll give you a simple example. So let's say your company is producing 15-20% return on capital, which means if you invested, let's say $1 million, you are fetching $150,000. Now the problem is, if you what to do with $150,000, you really don't know what to do with that. Now what will happen is you need to next year not generate 150, you have to generate more than 150 to maintain the same return on equity or return on capital employed. For that, now you will diversify. Now you need somebody who can actually take this money and invest in a similar kind of rate. Then only your company will multiply. Now, one way to do is to give some money to us from the company, and we do that job for you. That's one part. The second part is your company expand into further, either in the same vertical or in different vertical. For example, let's say one can open a franchisee store, or one can, let's say, go to the advertising, the billboards. But are you the one who is doing alone? Are you limited to the family members only? What stop us to hire a person from someone else's family who is equally capable and give him all kind of atmosphere to grow in life? So we have this company called Copart, and Copart has this person who is growing very fast, who joined them 5 years ago, and he was Germany's CEO, the Germany department of Copart. Eventually, this company is run by family where the son-in-law is the CEO, appointed Germany CEO as the co-CEO of the company. It's not easy, my friend. It's not easy. And that's what they did. So that's the depth to the management, that how far management can go to appoint the people from the company and allow them the delegation so that they can take decision. So in the long run, delegation is going to help all of us. So we have to make this many profit centers who can take a decision up to this particular level, so that they also act as a promoter and grow the company. So this is the depth of the management, which we will see in the practicality in some time. Now, how good are the company's cost analysis and accounting control? Now, this again, you have to figure out in the tone of the balance sheets and the financials and the other reports. You have to also look at the auditor they have. If you change your auditor frequently, it means there is something goofed up in the company. So what we have done is we basically gone ahead and made a list of companies with the auditors and since when they are the auditor of the company, which means everything is fine. The company is able to explain to their auditors about their concerns, and the auditor also would like to be the company's auditor for years. So good companies don't change their auditors so often. But this, again, the subject is not easy. One has to be an expert to understand how companies are saving cost and have the accounting control in place. Now, 11th point, are there any aspect of the business which are peculiar to the industry, which will give investor important clues about how outstanding the company may be in related to its competition? So we will again discuss about this. A very good point. So basically, for example, I don't want to take an example of you, but I've seen some of you really acting like the 11th point of the business, because you understand whether it is a restaurant business, a very peculiar business. And when you go to two restaurants, if you know the owners, you will realize how the one owner is putting the skin in the game and the other owner is just sitting at the office and making sure the business is running. So this aspect I will explain with the Netflix and Amazon connotation. Now, Netflix is charging us a premium. I'm sure we all agree. And Amazon Prime, we are buying because we anyway buy from the grocery of Amazon online. So Prime Video is just coming as a piggyback. We essentially not paying for the Amazon Prime. It is just kind of our add-on services. But definitely Netflix, where we are paying a higher premium, we are a added customer to them. Now, if you notice on your Netflix, you will find Netflix has launched a particular feature which say download something for you. So many of us who are busy, and when we go to the airport, we realize that now I am in the flight and I want to watch something. But 90% or 95% scenario, the flight doesn't have this internet, or they're very charged, the internet is paid. Now you want to watch something on your mobile and the net is not working. So Netflix has this feature on their app where they would have downloaded something for you, which you can watch on the way, where Amazon is lacking that till today. That's one. The second is, let's say I want Netflix at a lower price as compared to Amazon. So how can I get it? So Netflix is building up a next generation Netflix subscription where you can watch Netflix at a lower price, and you have to watch ad. For example, the same thing is already there in the Hotstar and Disney. So there are three versions of the payment plan. One is in the Disney, you pay a small amount, and you have to sometimes watch ad while watching the favorite movie. The second is you have Disney paid, where you will have certain screen. Then they have a Disney's third version where you will have more screen. So that's the another way of luring the investor. It's a very, very different way of looking at the business. Now let's come into the Amazon online shop or online grocery and noon.com. For the example, in Dubai, Noon has a definitely advantage because you can order anything within 15 minutes to 1 hour. So let's say I want to eat this, what do you call, the Arabic salad. I can get this Arabic salad from, I need this ingredient, and I can get them in next 30 minutes from Noon. I don't know yet if Amazon is prepared for that in Dubai. Obviously, Amazon is doing this in the US, and for Amazon, the Noon, the UAE market is very small. But these are the peculiar thing which a company is doing. So when I was in the US and I was ordering a phone or something from the other website, my friend told me order from Amazon because delivery, return, refund, and the qualities, these aspects are well taken care by Amazon. So these are the peculiar way you can watch. For example, Zoom also, all the people say Zoom has a great quality. When we talk on over a Meet, Google Meet, we found that the Google Meet qualities are not that good. Also, Zoom is a lighter version. So I'm still yet to explore more that how Zoom is differentiating among the closest competitor. But these are some peculiar way of how you can study a company or their product. Now, 12th point, does the company have a short range or a long range outlook in regard to the profits? Now, here, I think a very important thing we have to understand, any company which is focused towards long range outlook, because first of all, let's understand why you have come to the stock market. I am not investing in the stock market for 10, 15, 20%. So one of my investor who has invested in India, and I think I have also given a gift to a lot of you for a bank in India, and I've interviewed the CEO also. And the idea is to basically make you feel special. I don't give tips, but I gifted this gift to some of my friends here who are very dear to me. And this bank is now at 160, 170 rupees or 160 rupees, I believe. And let's say you bought 140 or 110, you're roughly at 20 to 40% profit. Now the question is what you're going to do. Will you sell? This stock is giving you a return at roughly 3 or 4 years of fixed deposit. Will you sell? The answer is absolutely no. The question is, you need to know why you are in the stock market. Please pen down that why you are in the stock market. Now, you are definitely not here for 10, 20%. I am not here for 10, 20%. Am I here for long term? No. I'm here to make 10 times. If 10 times are made in the 5 years, great. If it is not made, I will stay for 10, 15 years also. So the similar fashion, we need to figure out the companies which we have invested, the management is here for how many number of years. At the end of the day, all of us are going to die and the business will stay here. All of us want, before we leave this world, that our business should be alive, healthy, and should keep making money for the generation to come. Because This business has taken a lot of toll on our family. Let's accept it is not only your effort, your wife, my wife, our family, everybody has suffered. I left my hometown, you left your hometown, we all have left our hometown to create this business. So let's not do a small jugglery. Let's not try to save a lot of taxation or what do you call, find the ways to manipulate the financials, or let's just sell the low quality product. Let's focus on a large long range outlook. Now, how? Basically, Tesla, nobody even knew the company 10 years ago. This guy was busy in creating an electric vehicle. I came to know when 2017 18, when I drove the car, I said this is a amazing car, nobody have ever heard about it. But obviously I was a common man, we were not doing the investing on our own that time, so we did not invest in Tesla. And I'm sure you know the run, and I keep mentioning this again and again. But this guy has a long range outlook. When he was selling us car, he was also selling us the self-driven package for $10,000 to $15,000. Anybody who has gone to Tesla showroom knows this. $10,000 to $15,000 they were the package they were offering if you would like to be ready for a future self-driven environment. Now that is the kind of outlook Elon Musk had. Because why I'm focusing on this line, when I invest as an outsider in a company, I cannot know much about the what's happening inside a company. I can only know much about the jockey, which is the management of the company and their outlook. So Amazon has not performed for us for last 1 year, but Jeff Bezos has a very clear thinking, and he told all the shareholder last year in 2021, I believe he told that sit back and relax. We're investing in the future. If you go to Amazon financials, you will find that so much money capex he has invested in the last 1.5 year for the future ready business. Because today it's very important. You might get profit now, but if you not reinvest in the business, you will be missing the long-term picture. So this is what the very important point which Phillip Fisher covered those days itself. 13th point, in the foreseeable future, will the growth of the company require sufficient equity financing so that the larger number of shares than outstanding will largely cancel the existing stockholder benefit from the anticipated growth? In a simple line, people who keep raising money and diluting the shareholder equity are not going to make us money. So we have to look at companies which are not raising money from time to time, and they are going to generate huge profit. For example, Vedanta Global. A lot of people buy their bond. I'm taking this common name because Vedanta Global is the bond is offering roughly 12-13% today for a year, 1 year return. And people would like to go for Vedanta bond. But they need to understand that this company keep raising debt. There is never a time that company wants to be debt free. Company always, maybe the business as such. Now, the management can take a call. But I'm sure some of us run the commodity business, and doesn't mean that we keep raising the debt. Now, company keeps on taking the debt. So it's a very good company for someone to buy a bond and sell bond, buy a bond and sell bond to make money. But the stock is not moving anywhere, because at the end of the day, you are just keep raising money either through equity route or other debt route. So this is not going to help the shareholders to make money. So we are going to show you now. There are this fast growing company which are raising money XYZ times, and they are still losing money. This kind of companies are not going to make us money. We have to look at the companies which are canceling out the equities. So if you look at Warren Buffett, he keeps buying his shares of the company, and now very few people slowly and gradually can buy the company because the price is going to go up. So we have to look at the companies which are keep buying their shares from time to time, and they are so much sufficiently funded by their own net profit. So Zoom is one company which bought. If you read my letter where I said, how do I know that it's right time to buy stocks? I wrote this 2 months ago in May. And in this letter, we mentioned that all these companies which we have in the portfolio, they're buying their own shares. Police bought their $200 million worth of shares. Basically, what I'm saying is look for the companies which are canceling out their shares. They're a brilliant company to get into. And we'll just run an example, just 2 more points. I know it's very theoretical, but we'll go to a practical immediately. Does the management talk free to investors about its affair when things are going well, but clam up when troubles and disappointments occur. It's basically hiding. The true CEO will come and say sorry when the problem comes. It's a journey. The problem is part of life. So that's very important. So Warren Buffett has said many times that I failed you. It's my mistake. I take the full responsibility. I met this person called Tom Gaynor. And when I asked him a very simple question, which an investor asked me, that if there is a fraud in the balance sheet or the financials, who should be responsible? The auditor, the investing fund manager, or the owner or the promoter? You know what he said? He did not tell me promoter or etc. He said, I am responsible when I am signing my financials. So each of us as a promoter of our company are responsible when we are signing off our financials. So that's very important, that how humble the management is, how open they are it, and they are not just glorifying it. So I always tell people, and I'm again telling today, that we are down roughly $5 million this year. With a proud, I am saying this. I know this is a very overt statement, but that's part of the process. I can't help it. Something which has to go up has to come down and then go up. Nothing in this life has gone up straight, whether it is Bitcoin also, because a lot of us were looking for Bitcoin. All the businesses will go up and down. All we have to do is not to look stupid. We will never wipe out your capital because we are not leverage. We don't short the stock. We don't trade. So we can only charge 1% if we don't make you money. That also has to adjust in the profit. So what I'm saying is openness, frankness, agreeing to your mistake is very, very important. And that is what we talk about here, and we'll show you a practical. Last point, does the company have a management of unquestionable integrity? Now, this is something I'm going to take an example of Motilal Oswal, and then we'll take an example of our portfolio company Constellation. Motilal Oswal company has a very peculiar way. Everyone has to travel by default in the economy class for the work purpose. Because at the end of the day, if the company is paying for the business class for a 4-hour or 5-hour trip, it is going to go from the shareholder's pocket. Now, it could be debatable, but we have found the similar traits in some of the companies which we own, and they are US based. So we need to understand that the management has to be very clear and very, very open about why did they do it and what do they do it and how did they do it. So that's one point. Let's talk about, let's see the practical for all 15 points. So the one of the point which we shared with you, that a company which is there in the portfolio, one second, is this the right slide? No, sorry. So we have moved forward. Yeah, you must be thinking a lot of theory, but we have prepared the practical. So now look at the Amazon. Now this could be a clue for someone who want to research on Amazon. The cloud business of Amazon is right now at 33% of the market share. In the next 10 years, this cloud business itself is a pond. So we have a fish and pond theory. The pond itself is getting bigger. Our fish is one of the biggest, and it has all the capacity to become bigger, bigger, bigger. So the pond itself is growing by 15% odd, because it will become 4 times. And the Amazon and Microsoft and Google and the other companies all will be benefited. Now, this is the answer to the premise of Phillip Fisher, that does the company as a product and services sufficient large or sufficiently having a market potential to become very big. So Amazon has one such business, which is called the AWS. So that's the answer to the first point. Next. Now we have this company called Geely in our portfolio. We are long on Geely. Geely is a Chinese car maker, which is a conglomerate again. Geely just now has gone ahead and into the EV space, and it is one of the lead entrant, but we missed Tesla. So we invested in Zeekr and Geely. Zeekr has not yet gone public. Unlike Rivian, Zeekr has already on the road. It has already delivered more than 10,000 cars. So this is the answer, that does the management have a determination to continue to develop product and process that will still further increase total sales potential when the growth potential of the currently attractive product lines have largely been exploited. So for example, we all know that we do not want to buy the internal combustion engine car, because one very important reason is efficiency. So hybrid cars have a great efficiency, which Geely is already forced to do it. But Geely also launched Zeekr. Geely also bought Renault. Geely also got into the phone system. They are also trying to become an OEM manufacturer for car, which is the next generation. Now, I don't know how many of you thought about it or you know about it, but since phones have become so costly now, like a second-hand car, there is a market for second-hand phones also now, and they're called refurbished phones. So what I'm trying to tell you is that this could have been launched by the original company itself, and I don't know whether they have this or not, but a lot of new ideas which can make the business very attractive. And here this jelly is continues to expand, and now they want to sell in the US. That's why they bought some good stake in Renault. By the way, people who do not know Li Shufu, one should read about him. He was selling a refrigerator and scooty and the first Maruti kind of car in China. He is a visionary. He also owns a university. He's a mechanical engineer, and he owns London Taxi. He owns 10% of Mercedes. He is the one who what do you call turn around Volvo in 10 years, roughly 10 times of the wealth has been created out of Volvo. We are the owner of Geely Auto, and we are very much delighted. We are very eager to see once the Zeekr get listed. Zeekr is a shooting brake technology car, and the product is good. Company has got zero debt, and the company is now has satellites. By the way, companies also launch satellites like Tesla has launched satellites. Geely has also launched satellite. Now, this is a point. How effective are the company's research and development efforts in relation to its size? Now, let me pick one of you from the session. So maybe Mr. Jitu, can you just unmute yourself? I will explain this to you very simply. Mr. Jitu, you there? Any one of you, if you would like to volunteer, I will use you to basically explain this to you. Between these three companies, which we have Amazon, we have HubSpot, and we have IBM. Now, if you look at, we have made this as a percent. Anybody who want to volunteer, please feel free to speak. So we are showing you 10-year data of these companies. We are showing you the percentage based on the sales. Now, if you look at the R&D expense has been for Amazon has been 7 or 8%. It is increased to 12% roughly. In the same time, the operating income has increased from 1 to 4%. It's not gone down, which means the company's R&D is working. Overall, it is very less operating income because Amazon has this business called the online grocery business, which is a very, very low margin business. So we have to separate that from AWS and other businesses to see the higher gross margin. Now, look at the company called HubSpot, which is not profitable, but an amazing company. And the company has company is burning cash, but company was burning the cash at the 36%. Company's R&D expense have recently largely flat, but they've increased from 20 to 23% in the last 10 years. But company has started reducing their operating income losses very drastically from 36 to 3%. Now that is very, very remarkable. That makes a case for someone to look at HubSpot and could include him in the Scuttlebutt 15-pointer. Now there's a company called IBM. I'm sure all of us know. IBM used to be a darling of the stock market. IBM made a lot of money for people. Now look at in the last 10 years. IBM has increased the R&D expenses from, let's say, 5% of sales to 10, 11% of sales. They also increase selling and admin expenses on. So it also says that they have also increased the budget towards the sales. They are spending more money. But if you look at the operating income as a margin of sales has just halved in last 10 years, which means the company's R&D is not working. So first is the size. Second is whether it is working or effective or not. So we saw three companies and we saw that IBM is not really making money or effectively doing the R&D. Where HubSpot and Amazon are spot on the R&D, the effort they are spending on the R&D. We also look at the R&D size. So R&D of HubSpot is very huge in terms of 23%. I'm sure in Amazon, if we'll dissect between the AWS, then we'll find that R&D is again 24% or roughly more. We don't get that bifurcation in companies' annual reports so easily. That requires further study. But obviously in IBM as a company, not to go forward. One more thing Philip Fisher is trying to tell us, we should also look at 10-year data before we buy any other company, because we don't know about the future. But certainly we have the past data to analyze. So a lot of us are going for startup, etc. If in startup also we have the similar approach, we will not lose money. Just don't go to the startup sessions and just invest just because the idea is very, very good. You will end up in a similar result. Out of 30, 40 startup, one or two will do well if you will not approach and not apply the Scuttlebutt approach. But if you can apply the same Scuttlebutt approach in the startup also, the chances that you will make good money over there as well. Now, gross margin. Skechers, for that matter, which we own, Copart we own, they all have 44 to 48% margin, and the margins have increased. The size of the companies increased, the sales has increased, but the margins have also increased. Most of us have this problem when we have a higher sales number, our margin goes down. But here is a company which is basically having the margin going up. And HubSpot, again, look at the margin. It was 67% and it's now 80%. It's a gross margin, not the net margin, but that says that the kind of money they make on their product is a very good way of handling their supplier and a good brand value they have. So that's also Philip Fisher's point. Now, what does the company do to maintain the profit margin? Now, that's very important. Now, how many of you know that DMart is a great business? DMart, Mr. Damani has a very clear understanding that I want to buy all my stores. None of his stores, as per my knowledge, are rented out. Similarly, Copart and AIA, which are the two competitors in the US for a car, the defunct business where they buy this car, which are salvaged and sell it to the end user across the world. Copart owns their yard and AIA doesn't. And the benefit here the Copart gets is that it can offer better prices and the land assets get appreciated because with the time the city becomes bigger. Now, I was not very sure of these kind of maths, but these things have changed my thinking as well. So one should definitely try and own their restaurant or their facilities or their warehouse if they can get. I know it's not easy and it should be at a good price. So they really work as an asset for us. And when the times like this comes, we are absolutely not affected out of inflation. So great businesses are made with a very long-term thing. It's also long-term thinking of Copart that they own their land. So this also covers the other point of Philip Fisher, that does the management have a long-term vision or a short-term vision? Now, these points are still, I think I talked about the second and third point on the labor and personal relationship and exit relationship. You can always look at there's a company called, there's a company which helps you to rate the CEO and the employees can write down about the company, and then you can have a feeler out of it. Coming to above average sales organization, it's very simple. If company is having a good 10 to 15% sales growth, you can figure it out. But I'm sure one should try and visit Apple store, Amazon store, and Tesla store, and you will find the kind of salesperson they have kept. And recently, I also met a Zoom salesperson. I think the quality which people have kept and the kind of knowledge they have about the product is great. And they're not busy in selling you. The products are so nice. The salesperson are very knowledgeable. So it's very important for you to or us to figure out that the job of a salesperson is to help to buy and not to just sell. So I find Teslas and Amazons, the people on the store are very helpful and very knowledgeable. So this is one point which is still requires further study, because we are not yet to meet the direct salesperson of those companies, but we will do further study for our own comfort. Now, coming to the depth of the management. Now, there's a company called Constellation Software. Mark Leonard is the CEO and the chairman of the company. The company is $25 billion. Company has made 20 times return in the last 10 years. Company is nothing but a replica of what Warren Buffett does in the conglomerate business. He does in the vertical software management industry. And he doesn't take, so basically a very good way of understanding the depth, how many people work in the corporate office. So I'm sure you know, Warren Buffett has mentioned this again and again, that he has only got 26, 27 people in the headquarters. he meets the other CEO only once in a 6 month, and all the other companies' offices are in separate places. So less people in the uh, mm, corporate headquarters and more people on the field. Or I will say, in the terms of Mr. Narendra Modi, or Honorable Prime Minister, minimum governance and maximum government. So you need to have very few people. Even Berkshire Hathaway doesn't have a investor relationship department, and Constellation Software doesn't even do quarterly calls. And all the questions which you want to post, to the management, you should register them on the website, and they will answer it, so that all the questions which are answered earlier will not be repeated. So here, if you see, this company has done 76 acquisition last year, roughly. And the delegation of authority is very important. And I think I find it's very challenging, because in even my organization, I want people to take call on their based on the process, and they should not come to me for every small thing. So a very important thing on the process of delegation, people should they should be part owner. They should understand that there are consequences if they do wrong, and they have to also take the company to the next level. So it is no more a 9 to 6 job for any of our employee or our management. We all need to make them understand it is their company, and without them, the company cannot go to the next level. So here in the Constellation, if you look at the people on the headquarter, are roughly one person on 2,500 people. Same goes for Berkshire Hathaway. There's a company called Lifeco. Lifeco also have very few people in the headquarter, and rest of the people are on the offices where the work really commences. So that's how the depth, that's how you trust your people to do the effective functions. And that is what I think is the success for a company. You can't be micromanaging everything. You should definitely have an eye, but the delegation is must. Now, how we understood the cost analysis and accounting control is that which alter you have for so many years, and how do you have it. So Amazon has Ernst & Young since it went public since 1996. Copart has Ernst & Young since 2006. Interactive Broker has what do you call it, Deloitte from 1990. Ollie's Bargain Outlet has KPMG since 2009. Skechers has BDO since 13, and Zoom has KPMG from 2016. The question which we need to ask Skechers and Zoom, what prompted them to change their auditors? And that is going to be our next journey to our holding company, that why did you change your auditors? I think I did not see the time. 6:30. Yeah. So I'm just sort of, I'm just, I think 5 minutes will wind up the session. This is the same feature I explained to you about Netflix. So Netflix algorithm picks and or downloads a show and movie. I'm sure some of you would have tried this. And that's about a peculiar aspect of the business where Netflix is always ahead. So this is what the download feature which has been implemented at Netflix. This is about the long-term approach which Jeff Bezos mentions. He always talks about it's all about the long term. Now, if you have been invested in Amazon, and if you are reading his reports or the financial reports when he used to write and now Andy writes, he always talks about long term. And in fact, he told in one of the quarterly analysis report that the shareholders sit back and relax, because he was investing in the future. He was very sure. Amazon is a culture. So anybody who is holding Amazon, not making money in the last 1 year, should not get disheartened, but should read more about the company, what they are doing, how are they going to come back, how are they going to become a $5 trillion company. And that is how they will understand. So this is a letter of Amazon, which I will share with you after the presentation. This is something on the equity side, that are you financing again and again. I'll give you a very small story. I had a friend, मेरा एक दोस्त था, और 10 साल जब मैं साथ में था उसके, वो मुझसे हर बार बोलता था मुझे पैसा चाहिए, पैसा चाहिए. जब उसकी कंपनी की मार्केट मतलब कंपनी की सेल शायद 50 मिलियन दिरहम होगी, तो भी वो आईपीओ लाने की बात करता था, शेयर रेज करने की बात करता था. एंड आई वाज लाइक, अच्छा है भाई, अच्छी बात है, बंदा जल्दी ग्रो करना चाहता है, क्या प्रॉब्लम है. But I did not realize that this guy is always asking for money. What does that mean? Is he not generating money out of his business? उसको कितने पैसे बैंकों से मिल गए, उसको लोगों ने 15-20 मिलियन दिरहम भी दे दिए, बट उसकी पैसे की भूख शांति नहीं हो रही थी. And then he started hiding from me that he's putting this money into property, leveraging it out, etc., etc. And he took a house, a fancy house, did a good interior, and he has got some 15, 20 cars. I was like very happy for him. I was wishing him all the best. And I was look up to the guy. Chalo, this guy has come from, it's like a rag to riches story. And one fine day, the guy has got a check bounce and he got jailed and he has to give million dirham just to come out from the jail. So then I realized that if why he was asking for money again, it means somewhere he did not know the basic maths. The basic finance was missing, that he has generated money out of the business. Since he was in a commodity business like a sugar business, where the margins are very low, he was not making money. So similar example we have given you here. Look at Constellation. Constellation is never increased their shares. From 2007 to 2021, the shares are same. That's remarkable. They don't issue new shares. That's one thing. But earning per share have increased. So if you see that earning per share from let's say 1 to has become roughly 20 to 15. Similarly, Tulio, which is raising the share from 2015 to 2021, they have increased the number of shares and they have diluted our ownership. But their earning per share is not going up, it's going down. So that is very alarming. So when we were doing the analysis of the new companies to be held in the portfolio, Tulio sales growth was amazing. Tulio came in one of the top company. But when we saw that the free cash flow is going down and not going up, that is the alarming sign. By the way, it's already negative earning per share. Huh? So the red line indicates that EPS is already, anyway, it was negative. It has become further negative. Now coming to Pool Corporation, amazing company. I don't know how many of you know this. Swimming pool, all the material and the manufacturing item is developed by one company called Pool Corporation, and they also have distributor in Dubai. Pool Corporation has not done a fantastic job in their sales or their profit, but they have done a fantastic job in earning per share. How did it do it? Because they have started buying their shares. So if you see from 2009 or 10, the shares are just coming down, which has helped them to increase the EPS from let's say 2010 level of 2 or 3, the EPS is now 16 and 17. And if we have to make money in a company, the EPS has to go up, up and up. So that is the reason you need to figure out whether company is raising money again or not. Now this is about the Zoom, the particular feature of Zoom. And I will tell you, while I was buying Zoom, there was so much of noise. People were already written the death story of Zoom. People are saying it's a Chinese company. It is doing what do you call spying on your career or spying on your meetings, and it will go to Chinese government, etc. And they're definitely facing the scrutiny also today, but it is roughly at a value of $66-70 million. Zoom CEO, when the Zoom bombing happened in 2000, I don't know how many of you know it, Zoom did not have the password earlier. So you have the link, just log in. And they were really focusing on the big organization, but this tailwind which has came in the pandemic and 10 million people use Zoom. What happened one fine day, some people have bombed in a meeting and they just showed something ridiculous, and it would have happened multiple occasions. So what I really like about this guy, because we all do mistakes, he wrote that, I will just read out this here. However, we recognize that we have fallen short of the communities and our own privacy and security expectations. For that, I am deeply sorry, and I want to share what we are doing about it. So that is what he talked about, and then he got a lot of security feature. I have a security tab on my Zoom palette. I can log the meeting. I can enable the meeting room. I can do a lot of things. I can tell the participant that you cannot rename yourself. So you have to come with your own name. So if I want people to come with the original name, they have to come with the original name. So a lot of things I can do in the Zoom palette now on the security feature. I can also route my meeting through other countries, if not China. That all is he has provided. He has hired a lot of security professionals. So he has an unquestionable integrity and sorry, 1 minute. He has not only about, he is very open about the good things about Zoom. He's also very good open about and sorry about the bad things. But he also has an unquestionable integrity as of today. But let's not cover this example for that. For that, we have got Mark Leonard. Anybody who's on the call right now would love to read this. I will be very happy. Gulshan, Jitu Bhai, anybody, Anilji, if you can read this, it'll be great, because you will understand how this company is $25 billion and yet growing, and it is not have a single person who is right now has sell recommendation for the stock. Anybody who would like to read? Anirudh?
Does the company have a management of unquestionable integrity? The frugality is best described by Mark Leonard in his 2007 shareholder letter. I recently flew to the UK for business using an economy ticket. For those of you who have seen me, I'm 6'5" and tipped a non-metric scale at 280 pounds. You know that this is a bit of a hardship. I can personally afford to fly business class, and I could probably justify having Constellation buy me a business class ticket, but I nearly always fly economy. I do this because there are several hundred Constellation employees flying every week, and we expect them to fly economy when they are spending Constellation's money. The implication that I hope you are drawing is that the standard we use when we spend our shareholders' money is even more stringent than which we use when we are spending our own.
Thank you, Mr. Anil. So this is a billionaire who owns 5% of Constellation Software, which is a 25 billion plus company. He has one of the highest track record of acquiring companies. He's an ardent follower of Warren Buffett. We own this company in our portfolio. I know that it is not easy, friends. So there is something written I knew, and it's not easy to follow, that the way to become rich is not to increase your lifestyle the way your earnings are increasing. It's a debatable thing, but obviously I know one thing is for sure, that if you want to become and rich and be rich, the only way, or the one of the sure way, is to behave poor. I'm sure we have the Richard Brosnan as well, and we have a lot of other ways also. But this is a sure way that if you would like to become rich, the one of the great ways to behave poor. On that note, I've called this session, and thanks a lot for your time.